Today, digital currencies trade lower as Wall Street continues its pivot from tech giants. And Sui Chung of CF Benchmarks breaks down the current winners and losers in the crypto ETF space. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets in the red this morning as Wall Street rethought investments in AI and chip names like Oracle and Broadcom. As of noon Eastern, Bitcoin ticked lower, trading shy of $87,000. Ether fell about 2.5% to $2,863, and Solana was trading at $124.88. All right, let's jump right to our main story and talk about crypto ETFs and their outlook for 2026. Many spot crypto funds, like those tracking the price of Bitcoin and Ether, have been under pressure in recent weeks. But some, like the XRP ETF, have seen solid inflows. Crypto World's Jordan Smith spoke with Sui Chung of CF Benchmarks about the trends in crypto ETFs, as well as his expectations for institutional investors in the year ahead.
All right, thank you so much for being here. I want to start us off with, talking about the state of crypto ETFs. Given, CF Benchmarks is such an integral role in so many of the price and trade of so many of these tokens. Broadly, crypto ETFs have struggled along the assets themselves. There have been some bright spots, of course, among altcoins, and we'll talk about those in a minute. But I just want to get your take first on this current environment we're in and the trend we're seeing among crypto ETFs headed into the end of 2025.
Well, thank you very much for having me on today, Jordan. Yeah, it's been an interesting couple of weeks for the crypto ETF category, as we've seen the Bitcoin and Ether ETFs have shed some of their assets over the past 3 weeks. Roughly about 10 billion has left the Bitcoin and Ether ETF category. Some of that is profit taking. I think some of that is investors rotating into other assets, other crypto ETFs, as you alluded to. There have been launches for Solana, XRP, most prominently, and they have gathered around $1.5 billion to $2 billion. So it doesn't make up for all of it, but I think some of that is rotation out of Bitcoin and Ether, and then some of that is the rest is profit taking, some is profit taking, and then some who are some investors who see the outlook for crypto to be not as bright as they do for certain other asset classes, particularly given the interest rate trajectory has changed quite significantly over the past few weeks. I think some investors see potentially equities and indeed holding on to fixed income assets to be short-term the better play.
Let's talk about that pivot into some of the altcoin ETFs, because there are some bright spots in the space right now. As you mentioned, the XRP ETFs, which I think have seen around 30 days of net inflows. Talk about what the strategy is there. Is it investors who have originally invested in something like a Bitcoin ETF or an Ether ETF and were waiting for these altcoins to come to market? Are they seeing something special when it comes to these in terms of hedging against these downturns that we're seeing? Explain why we're seeing this rotation.
Yeah, I think you've got a mixture of different behaviors. I think one is certainly investors who have seen profits made from investing in Ether ETFs, Bitcoin ETFs, are rotating some of those proceeds into Solana and XRP most prominently. I think also Solana, particularly Solana, the narrative around Solana, the understanding that traditional investors have of Solana and the types of applications that run on Solana, the types of fees that Solana is generating, the users it has, the daily active users it has, makes for pretty compelling reading, I think, for particularly growth-oriented investors. And we see that Bitwise has generated almost $700 million of inflows into their market-leading BSOL ETF. So you've got that on the one hand, and then XRP, obviously a token with a lot of history, pretty high awareness amongst investors because of that, the longevity of history. And so many investors taking a position in XRP because of the familiarity. It has a long track record. Obviously, price performance has been pretty impressive over the past 3 or 4 years. So yeah, a number of reasons that's attracting investor dollars.
I want to talk about some of this institutional trend we're seeing toward tokenized assets. JP Morgan launching a tokenized money market fund recently. What does that hint at for institutional adoption on Wall Street?
Yeah, it's probably the single most exciting aspect of the crypto blockchain ecosystem, that what we're seeing is traditional assets be tokenized. So I think you've got to remember, you have the sort of ground zero of this are stablecoins. Stablecoins are a form of tokenized asset. They're effectively tokenized dollars. And they've obviously been very successful, as we see now, well over $200 billion outstanding in US dollar stablecoins alone. Further along that path, since the success of stablecoins and the recognition of stablecoins, we've seen money market funds such as Buddle Benji. We've seen equities, tokenized equities such as X stocks from Kraken. And in fact, even CF Benchmarks, even our index business, is not immune to this wave of tokenization. We recently tokenized our first index, an index of large cap tokens. The token is called LCAP. It's listed for trading on a number of crypto exchanges. It trades 24/7, bringing all those benefits of tokenization. And we've now seen DeFi protocols such as Morpho launch margin loans for the LCAP token, as well as derivatives exchanges launching perp contracts. So I think that's one of the elements of tokenization, is that once that people really need to understand, once an asset is tokenized and available on a public blockchain, then all kinds of protocols, all kinds of services can be provided for that token or based around that token, because it's effectively in this open source universe. And that makes innovation just happen so much more quickly and accelerates the path of adoption.
So what are the trends to watch in 2026 in the crypto space? These sort of products that we're talking about with tokenization, ETFs, what is the major trend that you're watching in the new year?
Yeah, I think you'll see advances on the ETF front in terms of tokenization, institutional participation. All of these areas will see accelerated adoption and innovation. But the way we look at it, the way we see how 2026 will pan out, is that the big assets in the space, such as Bitcoin and Ether, what you'll see is the complex of products around Bitcoin and Ether will deepen. So, give you an example, we at CF Benchmarks recently, with our partners at CME, launched the CME CF BVX, a Bitcoin volatility index that measures the 30-day implied volatility of Bitcoin by observing the CME Bitcoin options market. So that's what we mean by deeper. So, there is there are a lot of investors out there with significant exposure to Bitcoin, and this index allows them to hedge that exposure in a very cost-efficient manner. So that's what we mean by deepen. And then what we will also see is broader institutional adoption of crypto, i.e. more tokens be available to invest through ETFs, portfolios of tokens in index form available to invest via ETFs. And at the same time, that tokenization trend, which is, of course, actually the industrial application, the industrial usage of the underlying blockchain networks that are associated with the tokens themselves. So you're going to see deeper penetration of the crypto asset class into the capital markets, and you're going to see the capital markets and the institutions of the capital markets utilize the underlying software blockchain networks more deeply. So I think that those will be the two key trends, and that only points to a very interesting 2026.
Okay, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.